You bought a house in Vancouver for $900,000, 10% down, and by the time that mortgage is paid off in full, your bank is going to have made over $500,000 from you. Not from fees, not from penalties, just interest. And the craziest part, your bank knew that number before you even signed the paperwork, but no one showed it to you because banks, they don't sell total costs, they sell you a monthly payment, and that's the trick. If the payment fits, the house fits. That's how people think. Meanwhile, families making $200K a year are still stressed about money because in the beginning, most of their mortgage payment barely touches principal. Almost all of it goes to the bank first. And once you see the math behind how mortgages actually work, you realize why so many Canadians feel trapped financially for decades. Let's go. So let's run the numbers. You buy a $900K home in Vancouver, 10% down. That's 90 grand up front, which means your mortgage is roughly $810,000. But because you put under 20% down, you also need insurance. That premium gets added directly onto the mortgage. So now your real mortgage balance is closer to $835,000. Most people, they don't even realize that part. They think I put 90K down. Meanwhile, their mortgage instantly jumped again before their first payment ever came out of their bank account. So let's say your rate's 4%, pretty normal. And let's use a 25-year amortization. Your payment ends up around $4,400 per month. And this is where people stop thinking because they look at the payment and go, sure, it works. We can make that happen. But no one asked a bigger question. What's the total cost? Over 25 years, you're going to pay the bank roughly $1.39 million on an $835,000 mortgage, which means over $500,000, yes, $500,000 disappears into interest, gone. And here's where it gets crazy. Most of that interest gets paid at the beginning of the term. That's the part banks hope you never fully understand. Let's look at your first payment. Out of roughly $4,400, only about $1,600 goes towards your principal. The rest is interest, straight to the bank. So people think, I've been paying my mortgage for years, but in reality, for the first chunk of the mortgage, you're barely moving the needle. That's why people renew after 5 years and still almost owe the same amount. Then rates rise, payments jump, and suddenly people making great money, they still feel financially stuck because they're not drowning in income problems, they're drowning in interest costs at the bank quietly. And honestly, this is why I hate when people only focus on rate, because the real game, it's in the structure, payment strategy, cash flow. How quickly can you attack principal? That's where wealth gets built. Not by obsessing over saving 0.1, 0.2% on rate while ignoring how the mortgage actually functions. Now here's the good news. A tiny change can create a massive difference and almost nobody does it. Let's say instead of making monthly payments, you switch to biweekly payments. That's it. You're basically making the equivalent of one extra monthly payment per year. Most people barely notice the difference in cash flow, but over time, it can change everything. On this exact mortgage, that simple move, it cuts years off your amortization and saves well over $100K in interest. There's no refinancing, there's no massive lump sums, no making dramatically more money. Just understanding how the amortization actually works because mortgages, they're heavily front-loaded with interest. So every extra dollar you push towards principal early, it has a massive long-term impact. And that's what people are missing in the market today. The earlier you attack the principal on your mortgage, the harder your money is going to work for you. And once you understand this, you start looking at mortgages like from a completely different lens. You're going to stop asking, what's the maximum payment I can survive on? And start asking, how fast can I reduce principal? It's a completely different mindset with a way different outcome because the bank's favorite client, it's the person making minimum payments for 25 years. They're quiet, they're predictable, and they're profitable. But financially, that usually keeps people stuck way longer than they ever realize. So if you're buying, renewing, or you just want to see what your mortgage is actually costing you long term, reach out to me directly. I'll break down the numbers for you specifically. And if this video helped you, send it to somebody else with a mortgage who still thinks every payment is mostly going towards their house's principal, because for a lot of people, it's not. I'll see you there.